Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 22nd, 2024. I'm Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame Friday. A big time push through new highs, through the previous year's highs, all-time highs, and right now heading into the RTH Open, we have a narrow compression above the previous week's highs. Sitting here as we head into the RTH Open. This is a holding pattern here. As you can see, a very narrow range, 32% of average, 18 points holding pattern after incredible strength, especially to finish the week last week. These 2 days here were huge, especially from the Wednesday low. Now to hold at these highs, very important for bulls to defend pullbacks if further expansion is going to be seen. The early idea was any early weakness could be bought for a check mark day higher here, but again, the big level here to continue to watch is that 48.40 level, or 48.50 if you want to be a little bit more on the half here. Any failure to hold that level would open up a move back across the range below, and this is where an expanding range could develop. So you have this rectangle here, we've broken through the upside. Ideally, bulls would defend a pullback and you'd continue an expansive path here. However, if instead price were to fail to hold the 48.40, 48.50 edge, that could open up a swing move back across the range, and that could open up a wider range here of action as this thing continues to build out after a very impressively bullish Q4. So right now, very bullish overall. After the breakout and the 2-day rally, can bulls hold the 48.40, 48.50 zone for a continuation higher this week? If not, a failure could open up a return back down within the range. That's the thing to look for here early this week. We take a look here at the NQ. Similar price action for the NQ. Very, very strong, leading higher. Perhaps a stronger Wednesday low and a stronger Thursday, Friday rally, stacked the days on top of each other. That's a very, very bullish pattern. Right now, a super narrow range here, 42, 43% of average range. As we head into the RTH Open, very compressed range here. And as we mentioned in the ES here, ideally, a pullback could be bought for a continuation. A box like this, though, any failure, and you're rotating back down to retest the breakdown or breakout point up ahead. Now, this range again has been kind of rectangular, and any failure to hold that edge could open up a move back across the range, and that could create maybe a key range or a larger range to do business here. Until then, right now, bulls trying to keep any pullback bid, especially at the edge, 17.2 in that zone. So again, there's plenty of spacing here for a pullback and a continuation higher. Any failure to hold the previous week's high could open up just some modest weakness here, but bulls want to keep that bid for a continuation higher and extension out of this range. Looking at crude oil, this one's up about 1/4% right now. Failed new lows are where it's at in crude oil, especially with the bullish seasonality here. We have about the first 9 weeks of the year tend to lead higher. In this case, it's been mostly sideways. A lot of geopolitical conflict around the world here, and that can tend to lead to a rising commodity prices, especially in crude oil. One of the better patterns to watch here in crude would be a failed new low here, and right now we're developing a failed new low at the previous session's low. The idea would be for a failed new low outside day up in the best case scenario. Eventually a breakout from this range is going to lead to a 10, 12, maybe even 15 point move higher or out of this range, whichever way it decides to break out. So very short term right now, bulls keeping this edge bid, looking for a push through 74s. We're still at the center of this range though, so it's hard to really be too gung-ho about expansion when we haven't really gotten free from the range just yet. We could continue to see back and forth price action, and at some point here we will likely get expansion, and that's going to trigger that next big move. Again, the idea is we likely get a move up. 84 could be next, maybe as high as 91.5, which would be the 100% target of this large range. All right, taking a look here at gold. You'll see here gold a little bit lower here at the moment, mostly sideways here over the last couple of days. Still downtrending for the most part. Right here you can see a downtrending market here overall, downtrend in play, but we're still also inside the larger key range. This key range is huge, continues to keep prices in check. That was the initial thought when we developed the range, was that it's so wide we likely stay near the center portion of that range. The center portion is from this gray line to this gray line, and so you can see the majority of the price action has been spent in that box, but a downtrend within the range, and for the most part it's likely going down here, working toward the key range low at some point, and perhaps even testing the naked FOMC key level at 1996.70. But still in the range. Hard to really get too bullish or bearish when it's mostly inside the range, but we do have some slight downward bias at the moment. Failure to hold 2020 could open up a push into 2000 this week. Looking at the YM up about 0.2% right now. Very bullish overall, but not quite like the NQ or the ES. This one's barely peaking above the previous highs. That's new all-time highs as well. Nice little turnaround from the lows. This one really hadn't been participating last week until the very end, where it made the move across the range. And as we noted before, this range was so narrow that you really can't do business in this range for too long before you have to start expanding the range. And that's kind of what happened here. A modest expansion to the downside, then turns around and expands it to the upside. Now the range is a little wider. And at some point here, again, if there's a failure to fully break out and commit to the expansion, we could be looking at a strong high that brings us back down within the range as we continue to develop this range. So again, very clear compression overall. One of the more compressed markets we've seen on a 20-plus day basis in a very long time out of the YM. Tremendous amount of energy built up in this range. As soon as we do see some form of clear expansion, it could easily be 2,000 plus points of movement when it's ready to see that move. So again, inside the range, just kind of testing the edges right now. A failure to get a full-on breakout could drop us back into the range and continue to develop this compression until we're ready to see that full-on expansion. All right, that is it for now. We'll see how this develops the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.